So the question is, what if all income is from capital gains? It is a common scenario. We just don't hear about it from people, right? So if you just join my channel, my channel is about financial independence and retire early. And eventually, if I do decide to retire early, right now, we'll see, right? If I do decide to retire early, I could live on my dividend income. And dividends are actually taxed as long-term capital gains. So when people think about, oh, I got these investments, I got stocks and all that, I got to sell them to make a living, you don't have to. You can change your objective. So, like, right now, you're in the accumulation phase, so growth phase. Let's say you're in the 20s, 30s, or maybe 40s. You're in the growth phase to grow your investments, right? If you switch from growth to income, then it's not going to grow as much as you want with the growth objective, obviously. But as I get closer to maybe in the 50s, then I'm probably going to switch up to the moderate income objective. So what that means is that I would like to keep my investments in the stocks and just pay and live on my dividends. So for example, let's say I have ETF that just pays high dividend yield with 3.5%. Okay. There are a lot of ETFs like that. So if I have $1 million in there in that ETF, then the dividends would be paid out every quarter, but annually I'm making $35,000 a year. And those dividend rates do consistently go up, but they could cut the dividends too. The risk is that the dividends could be cut at any time if there's a huge market downturn. Let's say you go from 3.5% to 3%. But generally speaking, let's say I'm good on live on my retirement and my capital gains that I could always do, just dividends. Now, some people say, well, I want to keep my stocks growing. Okay, generally speaking, let's say for TSP or 401k, you may not be receiving as much dividends from the retirement accounts. Then yes, you will have to sell some of the shares that you own to live on it. The nice thing about living on capital gains is that you're taxed at 0 or 15%. Unless you're making over $500,000 a year, then you're going to be taxed at 20%. But people who make over $500,000 a year still find capital gains tax rates more valuable than the federal income tax because they get taxed at 32, 35, 37%. But with the capital gains, they're taxed at 20%. That's a huge saving, right? And when you're retired, I'm not talking about 401k now. The 401k, you still get taxed for federal income tax if you do the traditional 401k, right? But let's say you have a taxable brokerage account, a non-retirement account, and you've been investing in these index funds for a while, and you want to cash some of the shares out. Yeah, you're going to be taxed at 0 or 15%. Some people go as low as 0%. If you're married, so my wife and I, right? If we retire this year and we just want to retire on our dividend income, look at this, $94,000. That's not even counting the standard deduction. It's taxed at 0%. Did I zoom in too far? I want you to see this very clearly. Most Americans don't know this, and I'm very surprised about that, but I shouldn't be. But 0% tax rate for married filing jointly if your income is less than $94,000. That's crazy, right? So let me do some calculation here. So that's standard deduction at $29,200. You add that up to $94,054. That's $123,254. So if you live on nothing, but only on investments, you could have $123,254 in investments and still pay 0% in taxes. If you think you misheard that, just rewind it a little bit. And that is a correct statement. All right. Now, what does that mean? So if you make $120,000 from dividend investment with a 3.5% annual dividend yield, you could have $3.4 million invested, making 3.5% in annual dividend yield and still pay no income tax per the capital gains tax rate. Remember, they have to be qualified dividends though. If you have non-qualified dividends, that would be like REITs. If you own real estate investment trust, those are taxed as federal income tax. So keep that in mind. But if you have qualified dividends, that means you have to hold a stock for at least 60 days out of a 120-day holding period. Then it's considered qualified dividends. Log into your accounts and it's going to tell you how much of your dividends are in qualified dividends. And then some of them will say either non-qualified or ordinary dividend. Okay. Now, single guys, gals, $47,000. And before you say $47,000, that's terrible. No, it's not. Because remember the standard deduction, right? $29,000, your standard deduction for 2024 is 14,600. Okay, so 14,600 is considered non-taxable income. So if you add that up to $47,025, that's $61,625 that you could earn from investments and pay no income tax on. Fact check me. People still don't believe me in the comment section. And I'm like, dude, I showed you guys all of my resources and I showed you even an IRS website. You're like, size over exaggerating. That's not true. I'm like, well, not much I can do about it. But yeah, great question though. It is very common. People on the FIRE journey, financial independence, retire early, they are using this strategy to pay as minimal taxes or no taxes as possible. So great question. Thank you.